Ethereum, is it going to get to $10,000? Is now the right time, or should you wait a couple of weeks for it to retrace back and buy at a better price? Well, today we're going to look at the macro picture. We're going to go way back to 2017, and we're also going to look into August 2022 and what's likely to happen based on psychology of the markets, Elliott wave theory, practical terms, objective viewpoint, and also adding in some Fibonacci price, which is going to give us a real feeling for the psychology of the market and what's likely to occur next. So if you like today's video, like, subscribe, hit the bell notification. Thank you. Yes, you're part of my first 1,000 subscribers. We just hit that milestone. It's taken us 3 months. 3 months. Started with 5 subscribers 3 months ago. So I appreciate you helping me get to 1,000, and hopefully we'll keep growing and adding more and more value. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. I've been trading currencies for over 15 years, featured in this best-selling book, High Probability Trading Strategies, back in 2008, when I used to teach mathematics, believe it or not. But now I focus exclusively on crypto, blockchain, and I absolutely love the space. So let's dive straight in. Right, so Ethereum, we're on TradingView, the software. We're looking at a daily chart in terms of every data point represents a day. We're in a line chart, and we are back from 2017, which is down here, all the way up until today. And we want to see, is there a picture that helps us see what the market is likely to do next? But before we dive in, let's just do a quick recap. Markets tend to move into a 5-way cycle, and 50% of the time, the pattern is going to be very, very clear. Very clear. Other 50% of the time is not going to be clear. When it is clear, we want to use that information to help us make clear-cut, objective decision. So typically it's a 1, 2, 3, 4, 5. That's what a typical market would do. And we want to see in what context with this is Ethereum. And then after a 5 wave, it typically makes a B, C correction, right? So keep this in mind. And then there's sub waves within the wave. So I'm going to quickly break this down for you. Wave 1 has 5. Wave 2 typically has a minimum of 3. Wave 3 has 5 waves, ABC of a wave 4, and then wave 5 typically has 5 waves also. So we're going to use this information from a pattern perspective, but then add Fibonacci price, which helps us measure the psychology of the market. And then we're going to see what is our opinion of the market based on that information. I just want to double check that I'm recording. I'm recording, right? Yeah. This is my second take, guys. This is my second take. I recorded 30 minutes of this video. I'm gonna be honest with you, 30 minutes, only to realize I touched my microphone and it stopped recording on my camera. So I was 30 minutes in, I thought I did an amazing job. And then I looked at my camera and it was like, nope, didn't record. So this is my second take. So I thought, let me just double check that I am recording. Oh, I hate to do it a third time. So let's have a look. Macro picture first. What's the macro picture? Wave 1. Wave 2, wave 3, wave 4. Do you see it? Do you see it? Yeah, do you agree? Are we on the same page? Let's look at the theory. This is the theory. 1, 2, 3, 4, and then the beginning of a 5. And then we look at the actual chart and we go, hang on a second. 1, 2, 3, 4. Okay, what should we anticipate next? 5. Bang. Now all of a sudden you're high level when it comes to reading the markets. So now let's just notate this on the chart itself. We got a nice wave 1. Look at this. Whoop. Wave 1. Right? Because you want to have an opinion of the market, but you also need to be open that you may be wrong. Whoop. Click that button. It's underneath there. You may be wrong. In fact, 50-60% of the time you may be wrong, but you can still make good money when you're wrong. That's the cool thing about technical analysis. That's when you have to bring in risk management into your game plan, which we'll cover maybe in another video. But I'm just going to update this. So I'm going to put a question mark near the 4 because the 4 hasn't been confirmed yet. But that's the macro picture. Yeah, the macro picture is we are now on this wave 5 section. That's what we believe. That's what I believe. Right? So let's just now type in macro. We're saying we're on a wave 5. Make sense? Right, brilliant. So now when we look at this, we're saying, right, Ethereum seems to be on this stage of the market. Yeah, and if that occurs and unfolds, we should expect a correction. Just so you know, what comes after a correction is a continuation of a new trend that expands even more. That's typically what happens, especially with a growing market. And obviously crypto and blockchain is growing like there's no tomorrow. So now let's delete these. So now we also want to do a intermediate wave count, which is 1 degree less. What that means is there a wave count within the waves? So we looked at this and we said, okay, this is a wave 1. Is there waves within the waves? Look at this. What does this look like? A wave 1, wave 2, wave 3. I'm deliberately doing it this way because sometimes when I go fast, it might lose a lot of people, but I want to kind of tell you the method behind the madness. Yeah. So 1, 2, 3, 4, 5 of a wave 1. If we just jump back into the theory, look at this. 1, 2, 3, 4, 5 of a wave 1. That's why I'm so passionate about Elliott wave. Now, again, we don't try and force counts. When they're obvious, we put them in and they can give us valuable insights. And when they're not obvious, we don't put them in because they don't give us any insights. They just become a distraction. So now we can draw these in. I'm deliberately going to draw these in because this is going to be what we're going to do on the latter part of the market. But you kind of see what we're doing here. 1, 2, 3, 4, 5 of an intermediate count. What do you see here? Now, to be totally honest, in 2018, to me, it looked like an A, B, C. And I thought this was going to be the correction, the finish of the correction, and anticipating a continuation. But no, it went into a complex correction and it really just dragged out. So that's just life, right? And that's what you got to anticipate and be prepared for. A, B, and a C, right? So intermediate count of a wave 2, if I can just move this chart up slightly, looks like a nice A, B, C. Notate this. Blah, blah, blah. Let's get rid of these arrows. All right, we're making some progress. Good. Right, clear? A, B, C. Yeah, this is all in hindsight, but now we're going to get it up to today's date, and then we'll see, right, what we're expecting next, and we're going to project forward into the future. So we're now going to have leading indicators. So then we're not going to have the power of hindsight. We're going to have to be visionaries and see what's likely to happen in the future, because we have to make decisions today based on what's likely to occur in the future. That's how you make your money, because you can't make money going back in time and trying to trade this because that time is gone. Now we are on this part of the market. So now let's just look at this. I'm just going to draw them out so I can speed it up slightly. 1, 2, 3, 4, 5 of a wave 3. That's what I'm seeing. Yeah. And then if I just zoom out a little bit, this is the intermediate count. I'm just doing it deliberately this way. Slow and steady should be here actually. Yeah. And then if we just do, oh, that's the wrong one. We're looking for another A, B, C of a wave 4, right? And look at the theory. Look, A, B, C. Now, obviously I'm drawing straight lines on the theory, right? It's very straight lines. But the practical, there's all these choppy lines, waves within the waves. But with a bit of experience, you'll be able to see these. And now we look like we're beginning the first part of this wave 5. And then what typically will happen is something like this. A wave 1, which looks like it's formed. A wave 2, a wave 3, which tends to be the most bullish and aggressive. Then we have some type of correction. And then we'll have a final wave 5. And if we just put the waves on, it'll look something like that. But now we don't want to just rely on random drawings like this. What we want to do is really do a couple of things. First of all, let's just make sure we're on the same page. So we got an intermediate wave count. Enter. What do we believe we're on? We believe we're on a wave 1 on the intermediate count of, I'm going to write like this, of a wave 5. It's big text, isn't it? We'll leave it like that. So it means we're on a wave 1 of what we believe is a wave 5 unfolding. So I'm just going to quickly show you some powerful things when it comes to Fibonacci. Fibonacci is a price analysis, and it allows us to measure a wave, and because waves have a relationship with other waves. Wave 1 and wave 3 have a relationship, and a typical relationship, just for we can measure wave 1, and project it from wave 2. A typical wave 3 is 1.618. You'll hear me say that very, very frequently. And a typical maximum of a wave 3 is 2.618. And look at this. Bang on, right? Look at that. Right there. Right there. It reacted, it went just past it, overextended, and boom, wave 4 correction. Yeah, and that's what we're looking for always. And then what we want to look at now is how can we look into the future for the likelihood of an end of a wave 5? Is it likely to hit 10,000? What's likely to happen in the next few weeks and months coming? How long would it take? And that's what we're also going to look into as well. I might even do a bit of Fibonacci time, so we get a bit of time analysis. So first one, wave 1 to 3 has a relationship to wave 5. And the key ratios is 62%, which is up here, and 100%, which is up here. So now we have this time range. This is the typical zone of a wave 5 measured against a wave 1 to 3 and a typical maximum. Doesn't mean it's going to peak there and hit as a resistance and not go beyond it. No. It's just a high probability maximum zone. This part of this wave 5 over wave 3 absolutely overextended. You'll see in my video, I was anticipating it to go here and it just kept on mooning. And I was like, wow, the correction is going to be deep because it's overextended. So the correction is inevitable. It's inevitable. So this analysis by itself is not enough. What we want to also do is there's a relationship between wave 1 and wave 5. So we're going to measure wave 1, project it forward from wave 5, and the typical most common ratio is actually this 100%. But you can see it hasn't even gone above this peak, so it's not that relevant. And the typical maximum is 1.618 over wave 1, which is right into this zone. So that is a cluster that says, okay, the wave 1, that's quite an important piece of information that we want to be aware of. And then we'll just also add in the 2.618, which is all the way up here. So we've got these two zones here. This is really overextended for a wave 1 and a wave 5, but we want to be aware of these two zones. Again, we can get a bit more narrow. So what we're going to do now is we're going to use something called an external retracement. External retracements are not common knowledge. It's basically we're going to measure the wave 4, and there's a relationship with wave 4 and wave 5, and the most common one is that a wave 5 would peak at 1.618 or 272, sorry. So now we've got these two very particular zones. Yeah, making sense? Now Fibonacci, if you're not used to it, it's powerful. And that's why I wanted to show you the wave 3 to go right. It really pegged it in advance. And that's important to know, it's in advance. And like even this one here, right? If we look at this, because a lot of people, even traders, I've seen traders just don't get it. And sometimes, it's like each their own. This wave 1, 2, 3, 4, and then projecting forward a wave 5, I did the same thing. This is what I did in the video. This is why I was so confident saying a wave 5 or wave 5 high, and then the correction occurred. I measured wave 1 to wave 3, and I projected it from wave 4, and the typical maximum of a wave 5 is 100%, which is here. So as soon as I saw that and this was happening, I was like, okay, I'm looking to sell my Ethereum. Sell Ethereum now. Like sell anyway. And I ended up selling around here. It went a bit higher, and then it just went boom right away down here. Right, big correction. So Fibonacci ratios, price ratios combined with pattern are very, very, very powerful. So now what we want to do is a bit of time analysis. How long does a typical wave 5 take? How long does it take? And it's not how long is a piece of string, because actually we have a bit more information. We have how long it took to form wave 1. We can take it from here or here. Well, let's just take it from here. Wave 1, we're going to measure how long it took to form wave 1 back in 2017. And we're going to click this wave 4 low and project it forward. So just so you know what I did there, I measured this distance here and I projected it forward from here. That's what this red line is. And we only want this red line, which is the 1, which represents 100%. Yeah, hopefully that makes sense. Now we can do the same for wave 3. Now wave 3, and if I get this, we can either go wave 3 begins here technically, but because it's such a complex correction, the market really took off from this point. So it's a bit subjective, but you have to make a decision. And based on my experience, it makes more sense to make this decision. I'm going to project it forward from this wave 4. And now we've got this price zone, right? Price zone, not price zone, sorry, time zone. Let me get rid of this. So now what we can say is with high probability, now the ranges are quite wide, but we can say, right, there's this zone and then there's this zone. The minimum price would be like a double top, which will be $4,000 to just under 5,000. Regardless of how bullish you are on Ethereum, I'm very bullish on Ethereum. It's amazing. You know, EIP 1559 just launched and is in process. We've got the rest of the upgrade of ETH2 happening this year, next year. But, you know, we're almost ignoring all the news, all the fundamentals, just looking at pure technical psychology of the market. And then the other range is 5,500 to around 6,000, right? The date, look at this. May 2022 to September 2022. It's around a year. So this, when I was drawing it earlier, was probably too steep. Let's just say it was here. Be more like this, something like this. Oh. You know, obviously there'll be waves within the waves. And the real important thing to know is, as this starts to unfold, we will have more information. And as we have more information, we can narrow down where the peak is likely to be. So what I mean by that, again, is, you know, with our waves up here, let me show you what I did with, because I'm going to show you what I'm going to do in the future, right? Because we don't know. We're just analyzing in the future right now. We're projecting into the future, should I say? But if I show you this here, this is what I said. I went one bump for this wave 3, and this projection hit. But then what I did at the time was I zoomed in and I looked at this market, and to me it looked like the waves we were in were making a wave 1, 2, and I saw this wave 3 and wave 4. Now, to be honest, I thought the market was going to peak around here. That's the typical zone, but it just overshot, really overshot. But I knew it was on this wave 5 trajectory. So then I did the same analysis again, and I went wave 1 to wave 3, projected from 4, and it overlapped. And I was like, oh my God, there's 2 degrees of time frame that says this is a very high probability end of a wave 5 of a wave 3. So as soon as this point hit, I was very aware of the lows being made, and I was trailing my stop loss. Well, I was using more of a push notification. You know, here I was moving up, and it exited around here, give or take. That's what we're going to do in the future for this part of the market. If I just get rid of these now. And I'm telling you this because sometimes people just see loads of lines. It's like, what do these lines resemble? We're measuring psychology. You know, psychology is normally invisible to the human eye, right? Because it's thoughts and feelings and so on and so forth. But it represents a lot when it comes to trading markets and investing in markets. And it also gives us an indication of what's likely to occur next. So there you have it. There's my analysis of Bitcoin. 6,000 is likely over the course of the next 6 to 12 months. Is it going to get there tomorrow? Man, we've got a lot of work to do. I think we're going to get there quite fast, but we have to see how the market unfolds. You know, not looking at the charts, I would have thought 10,000, maybe 20,000. But looking at the charts and the psychology and moving aside that is Ethereum and looking at the fundamentals, just move that aside and just go, right, we're looking at pure technicals, psychology. This is what the probability states. Now, if we get new information as the market unfolds, we can make different decisions. But right now, with the information at hand, this is what we have. So let's just finish on this. Let's bring up a momentum indicator. I want to wrap up on some recent price action. Keep in mind that these momentum indicators, this one here, is a stochastics RSI, marries up with these lows. So what we anticipate is that the market, now we can get a bit more narrow, is likely to move down, sideways to down for the next week before it continues to the upside. And it will more than likely marry up with the indicator, get to the bearish zone, oversold, and then when we get a bullish reversal, it will coincide more than likely, especially when we get pattern, price, time, and momentum. Oh, we covered a lot today. Look, today was a deep one. Today was like a masterclass in itself. Ethereum, 8 wave, Fibonacci. Hopefully that's been helpful for you. Let me know, what did you find most helpful? Was it the macro picture so you really get that grand view of where Ethereum is likely to go? Remember, we're not in the certainty game, we're in the probability game, right? So it's not about being right, it's about what information do we have now and how do we act with high probability. Keep that in mind, keep that in mind. So long term, or do you just prefer the short term? I want to know what's happening in the next 7 days, the next day, Ideally, if possible, the next hour, because some people have different viewpoints and everything else. So if you like today's video, like, subscribe, hit the bell notification. I appreciate you being with me. We are at 1,000 subscribers now, which is awesome. It was on 5 like 3 months ago. We've done 120 videos in 3 months. It's like, wow, I've been working hard for you. So we're going to finish on a quote. Think and Grow Rich. It's a book that I used to study back in the day. And it says, let's have a look. This is a long one, but I think it's valuable. I believe that close association with one who refuses to compromise with circumstances he or she does not like is an asset that can never be measured in terms of money. It's saying that people are able to ignore circumstances. That asset can never be measured in forms of money, in terms of it's greater than money. Life happens, COVID happens, pandemics happen. Not that frequently, but they happen. But can you get the result anyway? More often than not, circumstances in my experience can be so real that everyone buys into them because it's so real. Like this happened. And someone go, yes, that did happen. I buy your circumstance. Therefore, I see why you didn't get the result. But can you ignore those circumstances and get the result anyway? People that can do that are on a different level. And when you can, don't buy into your circumstances. That is a big deal. If you can do that, different planet. Let me know what you found most valuable today. I will see you very soon. I'm enjoying making these videos for you, but let me know what you want more of, because I'm here to serve you, not to serve me. And I'll see you soon in the next video.